Good afternoon and welcome to the June crop production and WASDE briefing. My name is Lance Honig and I serve as chair of the Agricultural Statistics Board at NASS. This briefing is for the Secretary of Agriculture and other policymakers at USDA to better understand the content and context of today's reports. We are honored to have Secretary of Agriculture Brooke Rollins joining us today. Welcome. We also welcome Dr. Seth Meyer, USDA's Chief Economist. Before I turn things over to our presenters, I do have a few notes for our live streaming audience. The crop production and WASDE reports are considered principal federal economic indicator reports. The Office of Management and Budget provides specific guidance on how these important reports are to be released. OMB statistical policy instructs policymaking officials to refrain from making public comment regarding the content of these reports within 30 minutes of their release. Therefore, we will not be taking questions from the public during this briefing. Both NASS and World Board staff are available for phone or email questions. And NASS will be hosting a social media event at 1:30 Eastern Time this afternoon. We strive to have everything presented at this briefing match the official record. However, should there be any discrepancy, always refer to the official published estimates. With that, I'll turn things over to Anthony Perlman, acting Crops Branch Chief for NASS. He will be immediately followed by Dr. Mark Czekanowski, Chair of the World Ag Outlook Board. Anthony.
Good afternoon. I will be covering the June crop production report today, and we'll be presenting the current forecast on several commodities, including winter wheat, hops, cherries, maple syrup, and citrus. Now, before we get to the numbers in the report, let's look at the data sources we use to establish the estimates. Now, for winter wheat, we conducted 2 surveys this month. The first survey is our operator-reported survey, which we refer to as our ag yield survey. Now, in June, the sample size was nearly 3,000, with data collection occurring between May 30th and June 8th. Now, for this survey, we asked producers to report their expected yield for winter wheat as of June 1st. Now, we also conducted our objective yield survey. Now, for this survey, instead of surveying farmers, we survey wheat fields. We send trained enumerators into the fields to make plant and head counts. They go back to the same fields each month throughout the growing season to continue making counts. And as the crop matures, heads are clipped and sent to the NASS Objective Yield Lab for analysis. Now, field work for this survey occurred between May 25th and June 1st. Now, in June, the sample size was 975 across the 10-state region. But as a reminder, we use a phased approach for our wheat objective yield survey and enumerate more samples as the crop develops across the winter wheat growing region. Now, this month, we enumerated all the samples in 7 states, but only half in Colorado, Montana, and Washington, since maturity for these 3 states is historically behind the other states in the objective yield program. Now, ultimately, we will get to 1,150 samples starting next month when we enumerate all the samples. Now, looking at citrus, in June, we only have Florida reporting, and since harvest was complete as of June 1st, we did not conduct any surveys this month, but did use utilization data from the Florida Citrus Administrative Committee, which shows the quantity of fruit packed and processed. Now, this map shows how the ag yield samples are distributed across the U.S. As you can see, the larger sample sizes represented by the darker shade are in the major winter wheat producing states, as you would expect. Now, before we discuss the winter wheat forecast in today's report, let's look at the current conditions and development of this year's crop. Now, the information presented on this slide comes from our weekly crop progress and conditions survey. Each line on the graph represents the percent of the crop rated in good to excellent condition between 2020 and 2025, and the red line represents the current year. Now, as of June 1st, 52% of the acreage was rated in good to excellent condition compared to 49% in these two categories at the same time last year. Now, comparing this year's conditions to the previous 5 years, you can see that this year's crop is the highest rated at this point in time, so conditions are fairly good compared to recent seasons. Now, this next graphic shows how this year's crop is developing by looking at the percent headed compared to the previous 5 years. This data also comes from our weekly crop progress and condition survey, and again, 2025 is represented by the red line. 83% of the acreage was headed on June 1st compared to 82% at the same time last year. Now, looking across this time frame, you can see how 2025 compares to the previous seasons, and in fact, this year's development is 4 percentage points ahead of the 5-year average pace. Now, as a side note, as of June 1st, harvest was just underway with 3% harvested nationally. This is identical to the 5-year average pace. In Texas, 25% have been harvested, which was also in line with that state's 5-year average. All right, let's now look at the winter wheat numbers published in today's report. No changes were made to either planted or harvested acres this month. The yield forecast of 53.7 bushels per acre is also unchanged from last month's forecast, but up 3.9% or 2 bushels from the previous year. Now, if this yield is realized, this would represent the second highest yield on record. Now, production is forecast at 1.38 billion bushels. That's up less than 1/10% from the May forecast and up 2.4% from 2024. Now, the change in production is a result of state production changes, but as we mentioned earlier, the calculated rounded yield is unchanged from May. And then the bottom table shows the top 5 winter wheat producing states and how acreage, yield, and production compare to last season. Now, looking at the average U.S. yield over the past 30 years with the trend line yield plotted, you can see how this year's forecasted yield of 53.7 bushels compares to previous years and trend. Now, this map compares state average yields to the previous month's forecast. Let me give an overview of how to read this slide. The top number in each state represents the forecasted yield for 2025. The bottom number represents the percent change from last month. Now, states colored in blue have higher yields this month compared to last, whereas the states colored in red have lower yields this month compared to May. And the darker the shade, the greater the percent change. Now, as you can see, it's a mixed bag of states going up and down this month. But do want to point out in Kansas, the largest winter wheat producing state, the forecasted yield is up 2% or 1 bushel from the May forecast. Now, this slide is laid out the same as the previous one, but now we are comparing this month's forecasted yield to last year. If you look at through the Great Plains and Rocky Mountains, you can see fairly large declines compared to last year in Nebraska, South Dakota, and Montana, but yields in Kansas, Oklahoma, and Colorado are all up from the previous season. Now, looking at production over the last 10 years, you can see how this year's forecasted production of 1.38 billion bushels compares to the previous 9 seasons. And if realized, this year's production would be the highest in the U.S. since 2016. All right, the next 2 slides provide some information from our objective yield survey. Now, this slide shows the percent of samples that have been processed in the lab so far this season, which means they were mature enough to be harvested and sent to our lab for analysis. Now, as the chart indicates, 8% of the samples have been processed by the lab so far. Now, that is behind the 21% processed last June, but as you can see on the chart, the 21% was relatively high compared to the other years, which are more in line with what we are seeing this year. Then, as you can see, historically, we see a large increase next month as the crop reaches maturity. Now, this chart is showing some additional data from our objective yield survey. The vertical blue bar represents the number of heads per square foot as measured by our survey. The red dot represents the yield forecast for for the 10-state region that we conduct the objective yield survey in. As you can see in the graphic, the June 2025 heads per square foot at 46 is the highest on the chart and is the highest since 2016. All right, this chart will be breaking down the winter wheat production by class. Hard red winter wheat at 782 million bushels is down 0.3% from the May forecast, but up 1.5% from last season. Soft red at 345 million bushels is up 0.2% from last month and up 0.8% from last year. And lastly, white winter at 254 million bushels is up 0.5% from the May forecast and up 7.6% from 2024. All right, let's now look at how today's NASS production forecast compares to pre-report industry expectations. As a reminder, each blue dot on the chart represents an individual industry member's published expectation of winter wheat production. The red square represents the NASS production forecast of 1.38 billion bushels. As you can see, the NASS forecast falls within the range of expectations, so probably not much of a surprise with today's number. All right, let's now look at some additional crops included in today's report, starting with hops. Now, this particular slide shows our first forecast of the season for acres strung for harvest, which is forecast at 42,231 acres. That is down 5.7% from last year and the fourth consecutive year of decline. Now, if realized, this will be the lowest acreage strung for harvest since 2014. And as a reminder, this total represents the three states of Idaho, Oregon, and Washington. Let's now look at the current forecast for both sweet and tart cherry production for 2025. Sweet cherry production is forecast at 383,000 tons. That's up 4.3% from the previous season and the second highest since 2017. Now, production in Washington, the biggest sweet cherry producing state, is up 29% compared to last year and the highest in that state since 2017. Looking at tart cherry production, which is forecasted 138.5 million pounds, that is down 35.5% from last year and would be the lowest production since 2020. Now, production in Michigan, which is the largest tart cherry producing state, is down 41% compared to last year and the lowest state production since 2021. Now, since production of sweet cherries and tart cherries are published in different units, we included the pie chart in the lower left-hand corner, which shows how the two relate to total U.S. Cherry production. And as you can see, sweet cherries make up about 85% of total production. And then lastly, the graphics on the right give you some perspective on how production has varied over the recent years. Now, today's report also includes our annual maple syrup estimates. Production is estimated at 5.77 million gallons. That is down 1.5% from last season. Vermont, the largest producing state, accounted for 49% of the total taps in the U.S., and the state production of 3.06 million gallons represents 53% of total U.S. production, and that will be the third highest production on record for that state. All right, lastly, looking at citrus, as I mentioned at the start, only Florida is reporting this month, so any changes you see compared to the previous estimate only reflects what specifically is happening in Florida. All orange production is forecasted 2.48 million tons. That's up 0.7% from the previous estimate, but down 7.5% compared to last season. Non-Valencia orange production is up 0.1% from last month, but down 1.9% from last season. Valencia varieties are up 2.5% from the May forecast, but down 20.4% from last year. Grapefruit production is forecast at 319,000 tons. That's unchanged from the May forecast, but down 2.7% from last season. Now, as far as lemon production, we carried that number forward from the previous month, but it is up 12.5% compared to last season. And then lastly, U.S. tangerine production at 1.06 million tons is unchanged from last month, but down 4.5% from last season. Now, this slide just highlights a few of the upcoming reports through the rest of June and into July. On June 20th, we will be releasing our cattle on feed report. June 26th, hogs and pigs. June 27th will be agricultural prices. We'll be back in here for June 30th for acreage, grain stocks and rice stocks. On July 1st, we'll be releasing our CARES report. And then on July 11th, we'll have our next crop production report. But as Lance mentioned earlier, he will be on X at 1:30 today for Stat Chat, fielding any questions about the numbers in today's report. So this concludes the 2025 crop production report briefing. As a reminder, today's report and all NASS reports and data can be found on our website at www.nass.usda.gov. Now turn it over to Mark to discuss the WASDE.
All right, thank you, Anthony. All right. So here we go. Let's just jump right into the June WASDE, starting with wheat, as we often do. So global wheat production increased a bit this month, still record large global wheat production. Led by increases in the European Union. That is mainly higher production in Spain. Much better rainfall this year compared to last year. Also, bigger crop in India. That's government data, their third advanced estimate. You're going to hear me talk about the third advanced estimate for several of these commodities. But so bigger crop in India that adjusted higher, and small change in Northwest Africa as well. Global balance sheet for wheat. Beginning stocks down a bit. That is primarily driven by higher feed and residual use in Russia. Data indicating a little bit lower on-farm stocks in Russia, higher feed use. And that is also reflected in the increased feed use estimate for the current crop year as well. That the higher 400,000 ton increase for feed use, that is mostly Russia as well. Total use adjusted higher for Nigeria, India, and Sudan. FSI use in all of those countries. Global exports, global wheat trade, that is mainly higher exports out of the EU, larger crop there, and the US as well. We've seen some export strength in the US, which we'll talk about in a minute. Ending stocks down, that's mainly lower ending stocks in Russia and the US. So US balance sheet, main story here, you heard Anthony this morning, relatively, negligible changes in the production forecast this month, but exports, we raised 25 million bushels, strong early sales for this new crop, especially HRW. And that comes straight out of ending stocks, tightening up ending stocks a bit. And you can see that we raised our season average price 10 cents per bushel. They're reflecting those slightly tighter ending stocks. Moving into rice, global rice production and global rice production. So I should note here in the back year, we raised India's rice production forecast based on the third advanced estimate, government data. That was increased by 3 million tons, new record, and that carries through into this new crop year. We also raised India's new crop year forecast by 3 million tons. If realized, that would be their 10th consecutive record large crop, and the second year that they would be the largest producer in the world, surpassing China. And this increase driven by a couple things, increase in the minimum support price within India, and even more importantly, a great start to the early monsoon season. So real quick regarding India's rice production. Map here showing where rice is produced in India. As you can see, it's produced across most of the country, but we circled the areas there that are the largest production regions. And 3 crops a year, the Kharif crop being the largest, And just worth noting that again, this year, the monsoon is off to a really good start. So this is the precipitation across India last year at this time, and you can see good precipitation in the southern part of the country, but still relatively subdued compared to this year, where the monsoon is about 2 weeks ahead of schedule, or ahead of last year anyway. And that supports higher acreage and higher yields as well. So that's driving the production increase that we're forecasting for this new year. And rainfall traces across those main production regions across India. You can see all of the major growing regions are showing above average rainfall early this season. Still very early, crop is being planted, but it's off to a good start weather-wise, so that is supporting a favorable outlook for rice production this year. And as I noted, if realized, that crop would be the 10th consecutive record for India and the second year of India surpassing China as the world's largest rice producer. Sorry. So global supply and use. Let me give you this slide instead. So mainly, again, the global balance sheet is driven almost entirely by changes to the increased production in India. Back year, supplies increased over 3 million metric tons, reflecting that larger crop in India. That carries through into higher beginning stocks for the new crop year. Also, again, driven by India. Total supply and use, that's also mostly India. We expect India to export more as well, so that's most of the trade increase in the new crop year. And then ending stocks up, again, mostly India, as well as Pakistan, Nigeria, and Bangladesh to some degree. So U.S. rice balance sheet, a few changes this month worth noting. On the old crop, we raised our import forecast 500,000 hundredweight. That is based on increased imports to Puerto Rico from Argentina. We're seeing increased shipments from Argentina into Puerto Rico. Historically, it would have been more China, but we're seeing an increase in those shipments from Argentina, expecting that to carry through into the new crop year as well. Now, also worth noting here, we made an acreage adjustment this month, moving a bit off of the March intentions, and this reflects weather conditions. Two things driving this, mainly excessive rain in the Delta, really having trouble getting the rest of that crop planted. So we reduced the acreage in the Delta by 100,000 acres. But on the other hand, reservoir levels and plantings are going very good in California. So we raised acreage there, offsetting 30,000, resulting in about a 70,000 acre reduction this month. And of course, we will see at the end of this month what the actual acreage turns out to be. So that brings production down about just under 5 million hundredweight. Imports, again, we raised for the new crop year, expecting those medium grain imports to Puerto Rico to continue, and also higher long grain imports on the tighter supplies. Tighter supplies we're forecasting this month. Exports raised 1 million hundredweight, and that is mainly medium short, reflecting the higher supplies there. Average market price raised 30 cents per hundredweight this month. That is long grain, reflecting reduced supplies, tighter supplies. All right, moving into corn. Again, really small, fairly small changes this month. Back year, India production raised 2.3 million tons. Again, government data there. That's a yield increase, their advanced estimate. So based on that, we carried that trend forward into the new crop year, raised India's production by 1 million tons for 2025, 2026. And that's essentially the only global production change for the new crop year. In terms of the balance sheet, a few things starting with the back year, 2024, 2025. Let's talk a little bit about trade. Exports, we're seeing some export strength from the US and Argentina, driving that increased trade, partially offset by lower exports out of Argentina. Also worth noting that we reduced China's imports by 1 million tons, so now we're at 7 million on that back year. That would be the lowest since 2018, 2019. Then for the new crop year, 2025, 2026, beginning stocks coming in a little bit tighter this month. That is primarily tighter stocks in the US and China. Production up, that was India, as I just noted on the previous slide. Feed use up, that is also India, reflecting the larger crop there. And global ending stocks tightening up this month, 2.6 million tons. That is tighter stocks primarily in China and the US. In terms of the US corn balance sheet, on the back year, we're just, and I think you're aware of this, we're seeing some strength in sales and shipments, competitively priced, good sales, US corn. Competitive prices and doing better in many markets, including markets, Japan, Korea, Taiwan, and as well as our, standard larger markets like Mexico. And so with that higher exports on the back year, that tightens up ending stocks, which just carries through into the new year. Lower beginning stocks, no change to anything else in the balance sheet. So ending stocks tightens up by the same amount. No change to our season average market prices. Soybean production, soybean balance sheets in general, very little to talk about here. No major changes in our production forecasts globally. Global supply and use, very small changes again. Only one I'd note here that's probably worth noting on the back year, we reduced China's crush by 1 million tons. That increases the ending stocks for the back year, which carries through into the higher beginning stocks for the new crop year and raises ending stocks by the same amount. Also very small change, but that small change in the crush for the new crop year, that's higher crush in Pakistan, South Africa, and the UK. And even less to talk about on the US balance sheet. So no changes. So let's move into cotton. Global cotton production overall, we're looking at tighter global supplies, both on the back year and on the new crop year. New crop year overall production down 800,000 bales. On the back year, again, India production down 1 million bales. That again, government data, third advanced estimate, area reduction there. We expect that area reduction to carry into the new crop year as well for India. So that reflects that 1 million bale reduction in the new crop year. China, on the other hand, we raised our production forecast to 1 million bales this month. Still down from last year's abnormally large crop, mammoth crop. But they're off to a good start. Still early in the season, but the NDVI looks good. So we're a little bit more optimistic on area and yield than where we started out. So we raised that accordingly. Pakistan production down a bit. That's mainly lower area. Fairly abundant import imports, higher imports, meaning less need, less domestic production within Pakistan. Global cotton balance sheet, again, very small changes. Beginning stocks, that is almost entirely India, lower production in India. Consumption down a bit, that is mostly lower production in Bangladesh and India as well, reflecting the smaller crop there. And the balance sheet, back year, exports, we raised 400,000 bales. Export pace is strong. Maybe a little bit of front loading there, but just based on some, trade uncertainty, pulling some of those exports forward, but nevertheless, that pace has been strong, so that's reflected in that higher back year export forecast. And then for the new crop year, again, here we made a production change, moving a bit off of the March intentions. Same issue, wet in the Delta. As of this past Sunday, in Mississippi, only about 65% of that crop has been planted. The prevent plant date for insurance is June 10th. So, so it passed already. So, we're anticipating some acreage reduction from intentions just based on that. Lower prices as well aren't going to give a big incentive to get that crop in. So again, we'll find out at the end of this month what the actual acreage was. And then with the rest of the balance sheet, not much to talk about. Lower production, as I noted, lower beginning stocks reflecting those higher exports on the back year, just tighten up ending stocks by 900,000 bales. No other changes to the rest of the balance sheet, including no change to our season average price. Sugar, really, quite a few numbers up there, but pretty small changes overall this month. For the old crop, our production down a bit. The beet crop just truing up to some final recovery data. So lowered beet production by 16,000 short tons. High tier imports raised a bit this month. Now we're really just counting those imports as they're coming in. So that's refined sugar, as it came in since the last WASDE report. Domestic deliveries down, again, based on data, relatively weak demand. And so we're carrying that forward into the new crop year as well. And then in terms of production for the new crop year, small changes there too. Beet production forecast down a bit. This is mainly model driven, just based on the relationship between planting pace and yield. So small change there. No new information as of today on specialty crop TRQ. So that kept our import forecast unchanged, and ending stocks of just a small amount, and keeping stocks to use ratio about where we were last month. Mexico, supply and demand, again here, small changes. Looking at the back year, Mexico sugar production reduced 37,000 metric tons. That is a FAS post estimate there. Imports down, we think that's mainly reduced imports for the IMEX program. And domestic use down as well, as we were seeing more sugar move into the IMEX program. Ending stocks calculated as 2.5 months of use. That then exports are adjusted accordingly, up again 20,000 metric tons. All of these changes are small, and then even smaller into the new crop year. Beginning stocks down 10,000 tons, and that just essentially reduces exports by the same amount. All right, meat and livestock. Beef production, for 2025, we, lowered 70 million pounds. So basically what we have going on here, lower cow slaughter primarily offsetting higher weights, bringing production down a bit in 2025. Increased this month for 2026, reflecting higher placements in the second half of this year and modest weight gains expected to increase production in 2026 relative to where we were last month, but noteworthy, of course, still a pretty large year-over-year reduction in beef production. No change to our pork production forecasts for either year. We're pretty comfortable with where we were last month, and of course, we'll get the hogs and pigs report at the end of this month, so that will give us some better sense of where we are on the production side. Broilers and turkey. So broiler production for 2025 up a bit. Turkey production down. Both of those are just reflecting updated hatchery data. Turkey production for 2026, on the other hand, I mean, that's based on strengthening prices. They pulled production back a bit over the last few quarters. Prices have been strengthening, so we expect possibly that might bring some production back in next year. Regarding prices, steer prices just continue to amaze, continued strength. We're really just keeping up with the data that we're observing and then carrying that into next year, reflecting the reality of even tighter supplies and expecting demand to hold up. So hog prices as well, recent price strength supporting 2025. Also adjusted our hog price forecast higher for 2026, but there, we're still expecting a year-over-year decline in hog prices. Modest. Broiler price forecast. Broiler, I think broiler prices have been supported in part by the strong beef prices, and we're seeing that in the data. Some strength in the second half we're expecting, so that's supporting our price forecast for 2025, expecting that to carry into 2026 as well. Turkey prices, we've also seen some recent strength for a change, and expecting that to carry into 2026 as well. And as I noted, that is likely to provide some incentive for increased production. U.S. meat trade. Couple things worth noting here. Beef exports, still good demand despite the high U.S. beef prices. We're still seeing some strength, so we adjusted that slightly higher for 2025. Adjusted 2026 down a bit, and just again year-over-year tightening supplies. So should be no surprise there. Pork exports, on the other hand, for 2025, seeing a little bit of weakness, a lot of increased competition, especially from Brazil and the EU, increasingly as well. So that pulled back our export forecast for this year, and we expect that to carry into next year as well. Broilers, small change there. Turkey exports down a little bit this month, just reflecting higher prices. And beef imports continue strong too. Strength mainly, again, same countries, Oceania and South America, providing large supplies to us, continued strong, and shouldn't be too surprising given the tight U.S. supplies. Dairy, milk production forecasts increased for both 2025 and 2026. 2025, I mean, we're basically keying off the latest milk production report. And the main thing driving this is higher cow inventory and also some increased milk per cow for both 2025 and forecast for 2026. And in dairy product trade, the main item driving the changes in the forecast this month is butter. So strong U.S. butter exports, competitively priced, and also relatively strong imports of butter. Different specs, so a little bit different product in some sense, but strong domestic demand. Bringing in those imports, but on the export side, we're competitively priced and strong exports this year, and we expect that to carry into next year as well. And then skim solids basis, exports down for both 2025 and 2026. That is mainly non-fat dry milk. And finally, dairy product prices. Demand strength across the board supporting prices, which offsets higher supplies. So all of the major dairy product prices we increased this month, increased the forecast this month. That's supporting the class prices and all milk prices as well. I will just note class 3, 2025, that reduction, it mainly just an accounting adjustment. There was a change in marketing order coefficient, so that shows up, again, mainly just an accounting adjustment there. But otherwise, all of the dairy product prices are higher, supporting the class prices, supporting our all milk price forecast. And that is where I will leave it. I'm happy to answer questions. Thank you for attending, and those of you online as well. Thank you for attending, and we will see you back here next month.